Hey everybody, it's Mark Pruitt with Strategic Estate Planning Services. I hope this video finds you well. This is another strategic market update for the month of September. Before we get going in that though, I want to kind of let you in on a little secret. A lot of people don't know, and you're going to be one of the first to know, is Morgan Pruitt, my daughter, who works with me here, is now officially engaged. And so when you talk to her, call into the office, make sure you wish her well. I've set up my GoFundMe Dad page because I'm probably going to need that with the wedding, I'm sure. We tried to get her to go boy shopping, as I called it, a long time ago. And finally found a boy that she loves, and we love him too. I'm going to have a son in my life versus a son-in-law in my life versus just women, which is where I've always been outnumbered. I love them all to death, but it's going to be nice to have a guy to go fishing with. And that was my number one question is, does he fish? And if he fishes, then that'll work. So anyway, give her congratulations. We're very happy for her. Another thing I wanted to let you guys know, we're getting a lot of questions on I-bonds. Mark, should we do I-bonds? You can go to treasurydirect.gov. They're paying right now over a 9% fixed interest rate. The negative is you can only do $10,000 at a time per year. So what does that mean? So that means this year you could do $10,000, and if you're married, your spouse could do $10,000. When January rolls around, guess what? New year, you could do $10,000 and your spouse could do $10,000. It's a great fixed rate. The negative is you only get to put $10,000 per year in it. Now, the other thing that you want to be able to be aware of is to hold that for at least a year. Anytime after a year, you can continue to gain interest rates on this, and when you want the money out, if you do it before 5 years is up, then there is a 3-month interest penalty. That's nothing compared to the bank money making nothing. So if I can go make 9% plus in a given year on a little bit of money, that's great. So it's just a piece of advice I would tell you to go to treasurydirect.gov, and they will help you and walk you through that. If you need help from us, give us a holler. We don't sell them. You have to get them directly from the government at that site. So let's talk about the markets a little bit. The markets were self-indulging and thought that they had actually reached the peak of inflation, and the Fed would pause interest rates. That's what everybody's hope was. The narrative has been gaining steam since really the June lows, resulting in a bear market rally in July, which was only briefly interrupted by Jerome Powell's 8-minute speech following the meeting the Fed had in Jackson Hole. And then they had a quick short sell-off, and then the vice chair came in, Ms. Brainerd's comments, where she came in and said rate hikes would be reevaluated if they pose a disproportionate risk to the economy. Well, this time Powell's comments didn't slow markets at all. And so he reiterated that the Fed was still using the stated goal of bringing inflation back down to 2%. And the problem with fixating on that 2% goal is when you begin to fixate on the outcome, you're ignoring potential results that's what's happening around you. And what has just occurred is August numbers came in. They are not what they were expected to be. It came back in at 8.3% in August. July was 8.5, so that's very little drop whatsoever, and it blows up the reevaluation or the pause argument that they were beginning to have for markets. So markets plummeted. As many of you know, if you haven't, surely you didn't miss that, but if you weren't aware, markets dropped 1,200 points in a single day. It was the largest drop in the Dow since June of 2020. And so it's clear that inflation isn't going to self-correct back to the Fed's target of 2% right now. It's just not going to happen. And so we've previously said that the only reason inflation came down from 9.1% in June reading was due to a decrease in gas prices. So we've dropped from a national average of about $5 a gallon to $3.7 a gallon in the past 2 months. But the price of oil is still highly volatile, and most of the decline it's declined over the last couple of months. But that's really because of lower global demand. It's not because of additional supplies. So it'd take a lot to see, oil. It wouldn't take a whole lot to see oil spike again. Geopolitical crisis, natural disasters can easily move those prices right back up. And the thing is, if gas rises back to $5 a gallon, you're looking at consumer price index inflation again, potentially going back to 9 or even 10%. So the market's reaction or the drop was very predictable in my opinion. The Fed's likely not going to just raise rates by 75 basis points this time. They will, but they will continue to do that. And they will continue to do that and keep it elevated, interest rates elevated, until they try to get this inflation in check. It seems likely that the market finally got this message when they saw that 8.3 number inflation come in, that we're not done yet with inflation. It's easy to get discouraged at times. However, I will tell you, if your plan is sound and you've got income and you're meeting your goals, then stick to your plan. If you're worried about the current state of the market, feel free to call us. You can call us at 1-800-381-8870. We'll be more than happy to talk with you about it. We'll be more than happy to reassess a risk level to something that you are comfortable with. We're hoping that you're already there. We think you should already be there because we take a lot of pains to make sure that you're not out of your lane. And that depends on how much safe money you've got. Are you getting the income that you need so that you can ride storms like this out? But don't hesitate to call us with anything that you need. We're more than happy to help you. Hopefully this has been helpful for the September market update. If you've got questions, again, feel free to give us a call. Thank you for being here. We'll look forward to talking to you soon.